Stop Working Broke podcast, hosted by Chad Murray. If you're buried in jobs, chasing checks, and your phone goes quiet the second you stop pushing, you're not alone. Here, you'll get real tips and straight advice to fix your systems, tighten up your team, and create steady leads, because we build freedom by fixing what keeps you stuck. Let's get to it. Hey, thanks for coming to the podcast, Stop Working Broke. I am Chad Murray. This episode, which I've had to do a little intro to this episode because this is how important this episode is to most of you who own a business. This episode is going to change your life. This episode is going to get you financially set. This episode is going to set the tone for your business credit, your personal credit. Listen to this entire episode. I will put timestamps onto this, but this was my biggest mistake and best thing I did for my business. I just didn't have my kind of funding I can offer you now. What we have is a partnership with who I partnered with, Mike, that I wish I had when I owned my service business. And I'm telling you, this business, your business needs funding. And you don't have to use it. Yes, there's a fee to get it. But I mean, other than that, it is literally almost payback very like 1%. Or whatever the percentage is, which we talk about in there, of how much you take. This episode will get your credit fixed. This episode will show you how to do that, and we will help you with this. Listen to the end. I promise you, you will. So here's our second introduction. Here it comes. Thank you for coming to Stop Working Broke podcast. I am Chad Murray, like I just said in the intro. And so today is something we're going to be talking about that is super dear to my heart, super stuff that I messed up and then fixed and then messed up again and got. And it's something that every single listener needs to have access to. Everything what we're about to talk to, you must listen to today's podcast throughout the whole thing, because you are going to want to contact me or somebody else, hopefully us, about what we're about to talk to. Financial capital. How to do it, how to get your credit right, how to get the right funding for your business, and not bad, hard money, shit, crazy interest money. We're talking about good money to keep reusing at 0%. So here's my partner. If you didn't know about it, I got Mike Farrell on here. He's a MJ Funding. I partnered up with him, and we'll kind of talk. So, hey, Mike, how are you today?
Good, Chad. Good. Glad to be here. How are you?
I am great. I put off this episode a little bit too long. I should have had you back in the holidays a little earlier to get everybody ready for this year. But hey, right. It's the first podcast of 2026, and tell us a little bit about, give me the high overlook of what you do, and then we're going to get into the weeds, everybody.
Right. So, MJF Funding Solutions. We're business loan brokers. We use creative lending solutions to help fund businesses. What I mean by creative lending solutions is, typically if a business needs credit, needs lending, they'll go to their bank. And their bank will offer them one kind of funding, okay, which is typically SBA funding. Well, what most business owners don't know is that 90% of the applications that banks receive are rejected, and they don't have
more
a
if you own a small business.
Exactly, and they don't have a backup plan for you. They're just like, no, sorry, we can't help you. But there are all different lending products out there that small business owners can, access, and we provide them that access. We provide them the knowledge. We might have to use several loan products to get them there, but we get them there. So we are kind of like, I mentioned earlier, we're putting together a school for business owners. You go to school, they teach you math, they teach you literacy. Nobody teaches you credit. Okay. Right. Small business owners, medium-sized business owners, you could run $100 million company, but I guarantee you most CEOs have no idea what's going on credit-wise, how to position their companies, how to take advantage of credit, how to use credit as leverage. to gain access.
Right.
That's what we provide.
So, so guys, to let you know, so this isn't, I didn't just meet Mike. So Mike came to me actually to do his marketing
Yeah.
early last spring, or maybe a bit in late spring, whatever. Sometime, not quite a year ago, but came to me, wanted me to do his marketing, through my marketing company. And, and I pretty much told him I could, but it was not my specialty. And so we both kind of parted ways. And then when, I exited my company. I had all this money. I'm like, and I had never forgot about Mike. It's like, I really love the idea. And the crazy thing is, I probably needed to get a loan from you when I still owned Masters,
Yeah.
even though I'm still a small owner in it. But I probably could have gotten a loan from you when I first met you if I pulled the trigger, and would have helped us throughout the summer. But I didn't. But I kept thinking of you. You just never were out of my mind. I'm like, and I had a few clients that asked me for what I did with loans, and at the time I wasn't connecting the dots. And it's like, oh man. And then when I sold Masters, it was like I got some investment money, so I found Mike's appointment on my calendar, and I said, I got to text this guy. I want to go in business with this guy. I want to help. I'm already with business coaching. I'm already helping people, and almost every client asks me about how I funded myself and how I built my cash flow and all this kind of stuff. And I reached out to him with a text. I said, "Listen, I got something to talk to you about. Blah blah blah." And he didn't get back to me right away. It took him about a week to get back to me. And when we did, we hit it right off. We just partnered right up.
Yeah.
And we've already funded a few deals, and we'll talk about that here in a second. But I'll tell you who this was for. We funded a guy who both businesses have started their business within the year. One guy had superb credit, and one guy had really bad credit. Funded them both. Helped him fix his credit. So we'll get into those stories a little bit. But see, this I'm going to ask, and I'm going to let Mike kind of go down a little bit of an educational thing here and let him talk a little bit of what exactly that we do, because we're, we, I, here's the point I want you to talk, and then I'm going to let Mike go,
Yeah.
is if you go to look for money when you need it, you're not going to get it. It's going to be bad money. It's going to be high interest. They're going to shark you. They're going to keep you drowned in always paying it. You're going to have a hard time paying it up. You're going to end up paying 20 plus to 26% interest on a hard loan, fast money loan. You're going to get this big fat bunch of money, let's say 150K, and you're going to be paying it back weekly at 29% interest. And it's going to kill you on the back end of that loan. At first, you have the money and you go to use it, and it's great. Let's say you get an 18-month loan. You're going to burn through that money in 3 months. And then the next 13 months or 15 months, you're screwed. And I know because I did it a lot until I met, and this is why I wish Mr. Mike. So, Mike,
Yeah.
let's start talking about who we can help. Who
Yes.
can we help?
So, the interesting thing is we can help any business in any phase. If you're a startup, so you're just entering your business, starting your business, you have no revenue. Okay. Think about it. Go to a bank. Hey, Mr. Banker, I'm just starting my business. We have no money coming in. I need $100,000 to get going. What do you got for me? What do you think they're going to say? They're going to laugh and you're going to go on your way. We have programs specifically designed for startups. We can get you typically between $50,000 to $250,000 in startup capital at 0% APR for the first 12 to 18 months. So not only, do we get you working capital pre-revenue, but you're not facing those huge interest payments. You're giving yourself breathing time. This is so great for people, that are going to a business coach like yourself, because what everyone needs, to expand is marketing. You know, as you know, they come at you, hey, we're growing, we have jobs coming in, but they need money for materials, labor, payroll, and then now we have marketing fees to take care of. So this is great in those situations. You were talking about those high interest predatory loans, merchant cash advances.
Yeah.
Okay. Where they look at what you're depositing into the bank every month from your sales, and they give you an advance based on that. But what they don't tell you is they charge you an upfront fee, 20, 30, even 40%. And they can make your payments daily or weekly.
Right.
So not only are you paying these big fat fees, but every day they're sucking money out of your bank account. And as you know, the thing about merchant cash advances is they're like a drug. You get one, it's a shot in the arm. You're boosted. A couple months later, I'm stuck again. What do I do? You go back for another one. Now your cash flow is tied up. You could be bringing in $100,000 a month, but if they're taking away, half of that, and you're paying your bills, a lot of times you've got nothing left.
I know, because I was there, and
Yeah.
early in last year I was there. We were fighting. We had great sales. We did our
Mhm.
second best year in 25, and I was having $43,000 a month being pulled out of loans.
Yeah, that's insane. I mean,
Yeah. We were
one of
making
our
it and we were
programs
doing
is,
it. It sucked. I
yeah,
mean, that was straight to my bottom, straight to me was where that was money should have been going. And so,
right.
I mean, I went a few months without taking a paycheck because I just couldn't afford to pay myself, which 25 was only the second year I'd ever done that.
Hmm.
And we're talking about we probably did $4.5 million last year.
Yeah,
Well, I keep last year now as of a couple of days ago, right? Yeah,
right. Just a couple days ago.
yeah. And so, yeah, crazy. And so I'm just gonna recap for this, everybody. So if
Yeah,
you're a startup, I mean, you have no revenue. Like, did you hear that word pre-revenue? Or
yeah,
you just have not that much revenue and nothing consistency. This is your plan. Like, how are you going to pay to wrap your truck? How are you going to pay to actually hire a marketing company? Who's going to build a good website? Who's going to do AdWords? Who's going to pay for some of this stuff? Now, what these loans are for, and this is what I coach for people for, especially in this phase, but of course this accounts for everybody. This is a loan. You do have to pay it back. So even at 0%, you go borrow 50K and you're a startup, you better do it correctly. This is why having a coach or a consultant helping you do it, you got to pay that off. But the great thing about a line of credit, what we're getting you, it's not a loan, it's a line of credit. You get to keep using that money. So you go, consider a credit card at 0% is essentially what it is.
yeah.
It's a 0% credit card is what it is. So when you pay it off, and let's just say you got $50,000, you go spend 10K on marketing. That marketing gets you $100,000 worth of business. Pay the 10K off, and don't use your profits. Use the line of credit, so you're not using your profits. And then when the profits come in, you pay it off again. And you
Right.
see what I'm saying? You're not using your money. This is what rich people do. People is they get rich off of not using their own money. And
Yes.
if you're a solopreneur out there going, I can't do this, bullshit. You absolutely should be doing this because this is how you're going to get ahead faster. Because right now you're scared to spend $5,000 a month on marketing because how am I going to afford that? What if it doesn't work? You have all these fears. Well, now you can use someone else's money to do it. And then how are you going to learn? You might end up losing 5K, yes, but he hasn't told you the best part about how much you pay back right away. But I'm just going to finish this point. I'm going to let Mike continue.
Yeah.
So yeah, you're going to start learning how to market better. But you never had the capital to learn because you don't want to lose any money while you're learning how to market. So now all of a sudden you have a avenue to start learning what exactly works for you. And especially if you hire a coach like me, I will help you maneuver through those steps. And all of a sudden the next, let's just say 2000 after that first five starts netting you 4 or 5x. Now that first initial month doesn't matter anymore. So Mike, tell them about how much they got to pay back at
Yeah.
first.
So, the great thing about these revolving lines of credit that we're able to get for small businesses is the minimum payment that they have to make per month is equal to 1% of the outstanding balance. So if they borrowed $10,000, okay, I'm doing I'm buying a new truck, whatever, a marketing blitz, 10,000 grand. The next month, 30 days later, they have to make a payment of at least $100 on $10,000. Okay. And if they use the money wisely, for business purposes, that's going to get them a return. And by the way, the average return that we see with businesses we fund is, between 2 and 3 times the amount spent. So if they're, investing $10,000 in their business of other people's money, and you're very right, other people's money. I mean, look at, you know, who's the richest man in the world right now? A guy named Elon Musk.
Yep.
Okay. Like him or not, he's worth, I think, right now 700 billion. Well, a couple of years ago, he bought a company called Twitter, X, paid 44 billion. He could have, if he wanted to, wrote a check for that amount. Okay. But did he? No. What he did was he took loans. He got money from other people, from other sources, used that money to buy the business, and then let the profits of the business pay for that money.
Yeah.
That's what businesses do. They're not digging in their pockets, to pay for expansions, to pay for acquisitions, to pay for things. They're using other people's money, which unfortunately they don't teach you in school.
Yeah.
Nobody tells you how, the ins and outs of credit. But think about it. If you can leverage $10,000 and it's costing you $100 a month to do that, and you're returning, let's say you're on the low end, you're returning 2 times, 200%, $20,000, in 60 days. So 60 days, you've made one payment of $100. Now you got $20,000 that came in, subtract the $100 that you paid, you're at 19.9, pay back the $10,000 that you initially, took, and you're a capital advance of $9,900.
Yeah.
That's what leverage is. That's what other people's money does.
Well, also, I mean, there's another way to look at the usage of the money. So, I mean, yes, you need it in marketing, but every business has an off season,
Right.
And when you have an off season, a lot of you guys don't make enough money to pay the bills. Let's say, let's say you're running at $25,000 a month, so what is that? Roughly $7,000 a week you're doing, and let's say you have this line of credit sitting there at 25K. You really haven't used it a lot, or even if you use some of it, so what? You have a bad month, but you're upside down 5 grand. Well, 5 grand to a guy only making 7,000 a month, that's a lot of money to lose. And then when you're busy, I mean, yeah, you've had to save up money. You're always trying to save up for those months, right? Well,
Right.
well, so what you're doing here is you take your deficit of that 5K, you put it on the credit card at 0%. Maybe you add a little more marketing and try to figure out your off season to even this out with a little bit better marketing. And then you keep, when you get busier, you pay it back. You're loaning it to yourself and then you pay it back. And so, I mean, this is how the slinky effect goes away, is what you're trying to do. This up and down hill that never seems to go up. Like if you are watching me on YouTube, you'll see my hand. It seems like you're doing this, and the up never goes higher than a certain point. There's a line that you never scale more. But if you go up and you're going back and forth, and it is going up because you're now building revenue and building it, and you're learning how to keep saving more and use your credit. This is how you build. I'm telling you right now, 95% of businesses out there that are scaling
Mhm.
utilize a line of credit properly, and this is how they start doing it. You always wonder, how do they did it? How do they? Or you've all seen when you're another competitor come up, and you're like, that guy's an idiot when you first meet him and you first see it, and 2 years later, the guy's twice as big as you are, and it's like, well, that guy's not an idiot like I thought. And then as you learn, the guy hired a coach. The guy was doing everything right, and he like passes you like so fast. You've been in business 15 years, and this guy's been in business too, and he's already double your revenue. I guarantee he's using a line of credit.
Yeah.
He's using his money properly.
You know, there was a study that US Bank did, why businesses fail, why small businesses fail. The number one reason why 82% of business failures occurred was cash flow, not having cash flow.
Other than a divorce, why else would you go out of business? I
Exactly.
mean,
You have
seriously.
no money, you know,
I mean,
you're going to have lean months, you're going to have, prosperous months, but it's those lean months that can kill you. If you have a financial strategy, if you have a cushion, okay, to get you through those lean months, and not just covering the expenses, okay, because you got to grow, okay, even when times are bad. If you're not investing in growth,
right.
you're going to be done, you know.
It's a great point. I mean,
Yeah.
if you, this is why, I'm hammering a little bit on this episode of hiring a coach, get something that's mentoring you and helping you really scale. Because the thing to do is it's easy to scale when it's busy. Like when the iron's hot, when it's hot out, it's easy to sell suntan lotion.
Yeah.
It just is, right? But when it's cloudy out and it's cold, are you going to sell suntan lotion? Maybe there might be a way to do it. Have you learned to do it? And so like as a chimney company, I learned how to sell chimney repairs in August July and August in Texas, 110 degrees. We made money this past August and last July. I didn't do that 10 years ago. I
Yeah.
learned, and a lot of it was learning how to market correctly, and I had them spend the money and have it all right. And I guarantee you, when utilizing for many years I did utilize I only knew about the bad loans, but I utilized them right. And then I go through years like I didn't get a loan from 2016 till 2023. What we would do, we have them and we tickle them. So they kept
Mhm.
our limit high. So we usually carry around a $10,000 balance. It was still crazy bad money, but I tickle them, so they always kept me open. So
Yeah.
I never had to ask for money ever. If I needed 100K, boom, I'd literally hit a button. I have 100K in the bank account the next day. But it'd be shit money again. But that's how I grew my cash flow from literally nothing to 300K consistently in my bank is by doing that. And then in the last few years, we kind of got, like you said, addicted, to having more cash flow and not working it correctly and blah, blah, blah. But one of the things I wanted to hit on is it's not just when you're slow. It's like, or let's just talk about when you are slow. You want to also be secure.
Yeah.
And when people get slow, they make dumb decisions. You start doing really improper things to help you grow, scale. You get tight. You don't do things. You hesitate. And money gives you that opportunity to think correctly. This is one of the things that people just don't get. When my bank account says I've got 100K in it and I got to go spend 5K and I know it's the right thing, I don't hesitate. But if I've got $15,000 in the bank and I got to go spend 5K, ugh, I know I need to spend the 5K, but that's like 33% of my money. I don't know if I should do it. And then a lot of times you don't, right? So if you have access to the cash and it's 0%, I mean, it's like having 100K when you only have 15. So I'll give you an example. It was one of the ones we funded. The gentleman's he has over 100 and like almost 150K in revenue that has been sold, but not installed. And he was freaking out. And I said, okay, well, let's get you a line of credit. And he has awesome credit. And so I finally convinced him. It took him about 3 or 4 weeks. I said, hey, just apply, and then let's see how this works out. And he did. We got him funded. I don't know. I don't think he's used very much of it, but he did get his truck wrapped. Which he didn't done. He needed it done. And he called me up a week after he got funded. And he called to thank me. I don't know if I told you this, Mike. He called to thank me. He's like, I have no cares in the world anymore. I don't think about money anymore. And I'm like, I know, because all you did was you're worrying about the next 4 or 5 weeks because all your installs were going to happen in late December and January. Yet your cash flow is so down. Yeah, it sucks to live when how am I gonna pay the mortgage even though I've got all this money on the books? But I didn't, other than using his other credit cards or dipping into he needed to maybe dip in. He said he was going to dip into his to his stock market, and it's like I didn't want to do that either. It's like, yeah, no, this is what the line of credits are for. It's exactly what they're for. To live, help, make the right decisions, to where when the iron gets hot, you didn't have this big dip, and now all of a sudden, let's just say, when his business will start getting busy in March. What now in March when he's busy as shit, he's now supposed to go to his truck wrap, start marketing and do all this stuff. No, you do that now. Do that now. So when the iron's hot, it's way hotter. It's like turning the oven on a 200 or 500, right? And so,
Right. And, you know, when your business takes off, you have another issue. So you've got a lot of jobs, you got a lot of money coming in, but you've got a lot of money going out to cover those jobs. So you're pinched,
Yep.
There's always going to be a need in business for capital. Okay. And the wrong time to get it is when you need it. Okay.
Right.
Because then you're going to make silly decisions. You're going to get caught in a trap. Your back's up against the wall. So you're going to take whatever you can get.
But the funding people also see it because they're pulling your credit, they're pulling possibly your bank account, whatever they're doing. They're seeing your trend.
Yes.
So they see you need it. They see you need it, and that's when they start swimming around like sharks.
Yeah. Oh yeah. There's a whole industry, $1 billion plus, $100 billion plus industry made up of these high interest lenders, because so many people, like I said, they don't teach you credit. They don't teach you how money works. So the time that most people learn is when their back's up against the wall. Okay. And they're like, I need something now. I'm in trouble. What do I do? So it's, if you're in a position where, hey, I want to scale. I can see, the business improving. I can see things getting better. Notice that you're going to need money and do it now before when you can, have breathing room and you can make good decisions and you can set things up in a proper way so that later on when it's needed, you're not running around trying to get funds and, unfortunately getting stuck with, high fees and high rates.
Well, and it's just it. So, I mean, I was in a podcast the other day.
Yeah.
Had one of our competitors on it and great guy and listening to him and the host of the podcast, who's probably a $50 million guy, goes, I don't have a line of credit. and he's like, and so as he was talking to him, he has the same product. The guest has the same products as us. And the guest is like, okay. And as they're talking, the host is like, I'm going to get a line of credit from you. And then they start talking about how he's going to use it. and the guy has credit cards and he uses his credit. He's like, I mean, he's got American Expresses and he uses his American Expresses as it, but we're talking like 30-day buybacks, right? So it's like,
Right.
paybacks. And so it's like, well, that's not the same as a line of credit. And on the podcast, he's sitting there, talked himself into his own line of credit and la 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 la. And they literally, he applied online, got instantly did it. And he's like, I know what I'm going to do. And actually, he wanted to start up a roofing company as another subsidiary of his own businesses. And they planned out how to do it on the podcast with other people's money.
Yes.
I
Yeah.
mean, so this isn't, so we've been talked about the whole narrative so far for the first 30 minutes has kind of been about startups. This is not just for startups,
Right.
for mature businesses too. You might
Right.
have shit money or you have no money out there available to you, and you're all, and here's, if so here's something I want to hit. There is good debt and there's bad debt. If you're trying to live the Gordon Ramsay way, I don't understand it. And Gordon Ramsay, is, I actually like the guy. And he's not full of shit, but when you're in business, if you want to be able to scale and grow and use good debt, that is the way to do it. Because if it's going to slow you down so much, if you're
Mhm.
trying to fund your life with your own money all the time, and that's risky too. It's risky. So I mean, it's easier to use other people's money, and we keep saying other people's. It's funded to you. It's your money to use it to pay it back. Because once you get it, it works like that. But mature businesses never realize how much they could do because they start stockpiling cash. They start using their own cash. Why don't you just use other people's cash at 0%? And you just pay it back from the whole idea is you're learning your marketing, you're learning some stuff you do, fund it and let your investment of what you use the money for pay it back. You've already struck on that a little bit, but mature businesses or even to the adolescent maturity business, teenage businesses, been around 4 or 5 years that get stuck. It's like they're stuck because mainly they don't have the knowledge of how to scale and they don't have the finances to do it. And so that's what's important is to learn how to get the money, to learn how to use the money. So let's talk a little bit about, so we have products for everybody. So as a matter of fact, with one of our guys that we helped, who was a startup, his credit was bad.
Mhm.
Tell us about what you did for him.
So, like most, founders, they use their personal assets, their personal credit cards, their, you know, loans against their prop real estate houses, you know, as startup funds, or when things get tight, they use their own funds to float the business for a while. I mean, how many of you guys have, you know, had a hard winter and all of a sudden, I got to dip in my own pocket and I got to come up with this month's bills.
Yep.
So because of stuff like that, his personal credit was, let's just say, not good. He had loans out, late payments out, um, brought his personal credit profile down to the point where he wasn't fundable. Okay. Um, what we did was we consolidated his debt, his personal debt. Okay. Paid that down. Then we were able to get business credit for him. It took, 30, 45 days because we have to do the consolidation work. But once it was done, now his credit profile was great. He had the same amount of debt, but it was structured better. It had a clear path.
It was
His,
amazing to me. I'm
yeah,
interrupting. When it only took 30 days. The other
yeah,
15 days was just processing on our half, or him being a little slow to get us stuff. I I like this was my first experience of understanding how to fix credit, and I've only heard about it. I thought it was bullshit, or I thought it was just some companies out there trying to fix your credit. Guys, I will tell you, his credit is now like 730.
yes.
and I'm not, and his credit was below 650.
Yes.
45 days before. I could not believe it. I seriously, when I coached the guy as well, I could not believe when he told me that. And then, because he asked me about, okay, well, I got to get back and talk to Mike. I'm ready to get the 0%. I'm like, no, you're not. There's no way your credit's fixed. He goes, yes, it is. And he showed me. And I'm like, I was like, holy cow.
Yes.
That fast.
Right. That's what, again, going back to the point that they don't teach you credit. They don't teach you how to use credit to your advantage. So even with someone that doesn't have the best credit, we can set you up so you are fundable. Okay. It's all about using the different products and using the system to your advantage. And that might sound a little, far-fetched to a lot of people because they don't know the system. They don't know what banks look at. They don't know what the credit bureaus look at. What brings your score up? What brings your score down? When do they report? If I pay this off now, when can I see my score go up? All these things that you don't know. And you had mentioned earlier, about the podcast where the guy was using his American Express that gave him basically a 30-day window to pay it off. That's a charge card.
Yeah.
Think about it. How many people know the difference between a charge card and a credit card? Okay.
Yeah.
A charge card lets you pay your bills off 30 days later. Okay. But you have to pay them off in full.
Yep.
There's no interest charges. Okay. But you have to pay it off in full. That's not bad if you have deep pockets. If you're buying $100,000 worth of equipment and that's not going to create, a revenue stream for you for 5 or 6 months, that's probably not the best way to go.
Yeah.
Okay. Whereas a credit card lets you take that debt and spread it out over time and pay a portion each month. In that case, a credit card is better than a charge card. But again, these are things that they don't tell you in school. Nobody tells you this.
And guys, so I'm going to get into your head listening. It's like credit is like Bigfoot, or even, I mean, literally, maybe even, and I don't want to get religious here, even though you should be saved by Jesus Christ, all that. I'm into that. But I'll say this: it's like God. It's like,
Yes.
it's there, but you don't know how he works and what it is. It exists, and I don't really know how to really work it, and the Bigfoot reference is like, you see Bigfoot tracks, he's probably real. I have a credit score. It sucks. I don't know how to fix it, so it's these myths. It's like, in your own mind, you're like, I don't know how to do this. And so let's talk a little bit about the fees. So,
Yeah.
so so let me finish that point. It is not expensive to get this fixed, and it is your biggest interest to do it. It's your credit score. It's your finances. It's the stuff that you keep thinking you sell out of it. You'll build your business. You'll sell out of it. You'll have so much money. And he just told you, Elon Musk does not use his own money to buy businesses. He does not use his own money to run businesses. He waits till he gets it to the point where it's running its own business. But I guarantee if he needs to go buy a new wing of Tesla, he doesn't just take Tesla's profits to do it. He'll use a line of credit or something to go build a new plant. It's no different than you going to want to add 2 more trucks to your business.
Right.
So let's talk about the fees.
Yes. So there are fees. We charge, 9% success fee. So what that means is 9% of what we're able to get. So if we got you nothing, our fee is nothing, and what I like to do is, in order to help incentivize, your audience is, if someone from your audience reaches out and wants to get funded, we actually will cap our fees at $10,000. So if we got you, 50,000, its fee would be 4,500. If we got you 100,000, the fee would be 9,000. If we got you 200,000, the fee would be 10,000. So we cap our fee so that we get you the most money possible. We're always, trying to get you the most money possible, but we also want to do it responsibly. Okay.
And by the way,
Uh,
that's funded on your 0% credit card, or you
yes.
can pay as cash, But here's the thing, like the little guy that like, holy shit, I got to pay 10,000. No, 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 no. If you go get 25K, you're only going to pay like 2,200 bucks. That's the fee.
Right.
Okay.
And as you mentioned, you know, we put it on 0% credit card,
yeah.
but the credit card also is a rewards card. So, for example, one of the cards we use, it's 18 months 0%. When you spend $3,000 within the first, I think it's 3 months, you get $500 cash. So we take the fee, the 2,200, put it on that card. Now you're, you know, $800 away from getting $500 back.
Right.
So little things like that. Again, they don't teach you, but imagine this: if you put your daily spend on a card that paid you back each time you used it. Let's say you're a small business, you're doing $50,000 a month in expenses. It's 600,000 a year in expenses. If you got 2% back on that, that's an extra 12 grand a year for free.
Yep.
For free. Okay.
Just to
Again,
learn how to use your credit and learn how to use your cards.
exactly. These are things that we work with our clients and we show them, what to do, how to do it, how to reward yourself for doing it. I mean, just think, the end of the year, you want to go on a vacation with your family.
Yeah.
What if you could pay for the vacation with points that you accumulated on your daily spend?
Yeah.
That's great.
There's just people out there traveling for free all the time.
All the time.
Completely.
I have not paid for a flight in years, believe me.
And so, all right. So let's talk a little bit about the credit fix.
Yes.
So how do we do that for people? Because I know a lot of people are listening as well. I'll never qualify for this.
Yeah. So, there's different levels of credit, obviously. If you're in a position where you're over leveraged or overutilized, which means you're using more than 40% of your available balance. So if you have a card that has a $10,000 limit, but you're, use $9,500 of it, the bank looks at that and they say, oh no, this guy is in trouble. Those are easy fixes. Okay. We get you a term loan, we consolidate that debt, we spread it out. So now your utilization goes from 90% down to 20%. Okay, which increases your score dramatically. Let's say this is something I see a lot, which is, I'm sure a lot of your audience can relate to. You went and you bought a new vehicle, and the dealer shopped the loan around, and you've got 15 hard inquiries on your report from this loan, right? Those inquiries cost your points on your score. Banks look at that and they're like, this guy is in trouble. He's looking for all these different loans. Got to be a reason. So that hurts you. Okay. We have partners that are able to remove those hard inquiries from your account, which again raises your score, which makes you more fundable.
Pretty fast too, right?
Very fast, usually, 30 days or less.
Yeah.
So
a couple
these
days
fixes,
sometimes. Yeah.
Yeah. These fixes, are good ways to, take something that you thought was not good and impeding you to make it into something better. For people that have, harder credit, charge-offs, lots of late payments, all that. We do have pathways for those. It just takes longer. Okay. It might take 6 months, 3 to 6 months to get that straightened out, but there's a light at the end of the tunnel. Once it's done, once it's straightened out, then you're fundable. Okay. And the thing is, bad credit costs you money.
Yeah.
You might not know it, but your insurance rates are higher if you have bad credit. Your interest rates on loans are higher if you have bad credit. The price you pay to live, just your daily life, is more with bad credit. Okay. It's everywhere. When you apply for anything now, when you want to rent an apartment, you want to rent a store, they want your credit, your social security number so they can run a credit profile. Bad credit costs you money.
So let's get you fixed and funded. So what do we charge for the credit? What do we charge for the credit repair?
I believe it's like $330, $350 to, remove hard inquiries from your report. If they've got really bad, charge-offs, tons of late payments and stuff, it's more intense, more work. It's about $1,000 to do that. But I guarantee you're paying more for your life, for your daily expenses, than the $1,000 is going to cost you in a year.
Yep.
So don't think that you're unfundable. Don't think that we can't help you. Don't think that you have to accept the extra fees that you're paying. It's better to go through the credit repair process, get that taken care of, and move on with your life.
And if you're the one who's listening to this and you're like glued to this podcast listening, yet you got this little devil on your shoulder going, I can never fix it, and you're not going to do anything about it. Well, guess what? Someday you're going to do something about it, and I will promise you, it's better to do it now than later on. I mean, why wait? Because you literally can build your credit up to 750 to 800 in a year if you do this right. We're talking about like so funded, so easily, so good. You go get a bad loan, you can go get a loan for 14% versus anything else. Just go get a mortgage. Mortgages are going to go nuts. Everyone's going to be refinancing, buying in the next 24 months. That's going to come back. You'll get a house payment when the prime is going to be probably, let's just say 3. They're going to fund you at 5 to 6. That is going to cost you probably $1 million over the lifetime of that deal. It's so expensive, 1 or 2 different points. And I know because I bought my first house at like 3% over prime. And it took me 2 years to get my credit right to have to refinance. And I think at the time it saved me like $100K if I had better credit. Just my house payment. Stuff like that. So, it is. So I'm telling you, of course, I'll have the link in the description of this podcast for you to apply. You just apply. If you get rejected, a rejection letter, that's okay because your credit's bad. You're going to get it. But then what's going to happen is you're going to get a link to us to make an appointment with Mike. And then we're going to start the credit repair and the fix it. So that's how this is going to work. So you first got to apply. Don't try to call me. I'm just going to send you the link. I'm just going to literally just say, fill out the form. You've got to do it. It's a soft pull on their credit, right? It's a soft pull.
Yeah, no impact on your credit to apply.
Right. And so you'll do it. We'll know instantly. So guys, if you have good credit, this is going to go fast. You'll get funded pretty quick. And what holds you back is when you get funded is how fast you keep getting back to us. Mike's efficient. We'll get done quick, but it could take you 3 weeks to a month if you wait to keep, if you slow play getting back to what we need, which is not a lot, but we'll get you, we'll know right away how much we pretty much can get you. If you got so the criteria is you got to have an LLC or corporation, right? You got to have credit to get funded fast. You got to have credit of 700 or better.
Right.
And what else? That's it, isn't it?
That's it, really. And, with a lot of these loan programs that we use, these startup programs, they actually go on anticipated income. So if you're just starting out, and this goes back to what we're saying pre-revenue, your business is not making revenue now, but you anticipate a year from now you'll have an annual revenue of $250,000. Well, the banks will take that as your revenue mark and base your credit decision off of that mark. Okay. Not all loan programs, but ones that we have for startups and for other revolving lines of credit businesses do that. We try to make it as easy as possible. If we can use a loan program that doesn't require income verification, we're going to do that. Okay. Right. We want to get the money to you as fast as possible. Okay. At the best terms as well. So we look at, what's out there and what's going to fit best for that client. So yeah, as long as you get us what we need, and in most cases, what we need is just for you to say, okay, I choose that. That's it.
Guys, it's super easy. This is what's crazy. So you see, so I want to end the podcast on this. So what does this seem too good to be real? And it's not. It's 0%. There's a 9%. So that 9% is not interest, no interest on it. So it's just a fee. It's a one-time fee of 9% of whatever you get from us, and then and it's either pay us or fund it through the credit cards, whatever, whatever we get you. But here's the thing, it literally. So you're gonna. I lost my train of thought here where I was going with this, but
if it's real.
Oh yeah, it's real. So how does it work? So explain to people why it's real. Like why would the banks give me free money?
Okay. So the banks will give you free money, one, because they want your business. Two, every time you use a credit card, there's a merchant processing fee of anywhere from, I think the lowest I've seen is 2.5% up to 4%. Okay. That's what the banks make on the back end. So even if they're giving you 0%, they're still making 2.5% to 4%.
From the vendor, not you. From the vendor, people exactly. They swipe at. So Home Depot is paying them 2%.
Yeah, and more. If your business accepts credit cards, that you pay a swipe fee, right?
Right.
So yeah, it's not totally free, in the grand scheme of things, but the business they're going to get in the future makes it well worth it. Just to let you know, I want to show you something. Okay. Yeah. This is my personal 0%. Look at all these cards.
For everybody listening, he's got a fan of about 20 debit cards or credit cards.
Yeah.
Yeah.
All 0% that I use in my business. Hundreds of thousands of dollars, literally over $300,000 in 0% credit that I have, that I use to run my business. I got to tell you, it's a lot better than paying, 10 to 15% on that money, and it works, I mean, be smart about how you use money, use other people's money when you can, because that's how you grow. Okay.
Yep.
Have a plan, execute it, get together with your mentor, your coach, put together a plan where hey, if I'm going to spend $10,000, I'm going to make $30,000 back.
Yep.
Unlike your personal life, where if you put $10,000 on your credit card because you wanted to go take a trip to the Bahamas for a week, that's not bringing you money back.
Right.
Okay. If you take $10,000 for inventory or for marketing, put it on a credit card, you make $30,000. In return, pay off the $10,000. Now you got 20 grand to play with.
Super important point. This is business credit.
Yes, business.
This is not so we have to fix your personal credit to get you business credit. And most of these cards are not going to report to your personal credit.
Right.
It's building your business credit. I almost should have said this in the beginning.
Go.
But so this is what's important, guys. You've got to build your credit for your business. And as you do that, you're going to be more fundable for all these, as you start evolving and start using it. The reason why Mike has 20 cards, because nobody will, even the big banks, they're not going to give a line of credit out generally for more than 150K.
Yes.
And so you're going to get a lot of little ones. So yes, there is some management that you're going to have to do on your back end because we might get you 50K, you might get 5 cards.
Right.
Right. So, it's called credit stacking. And there's a lot of bad stuff out there, credit stacking, because people do it wrong. If you do this correctly and it's not reporting to your personal, it's a business thing, this is where we're talking about. But it is still a loan. You still have to pay it back. You have to have the discipline to use it to invest in your business. And I'm not saying you couldn't go buy your wife something on it, but you better pay it back because you're going to have to, but stuff like that. But I'm just saying, this is where you start building your business. And so I'm actually going to have the link to, go ahead. I'm sorry.
I was going to say, we actually have a software program called My Figures that connects all of your accounts. So if you have, 3 bank accounts, 10 credit cards, 2 lines of credit, My Figures puts all that information in one spot where you'll be able to see at a glance everything. So you don't have to worry, I can't manage 5 different accounts. Now you can, okay? And we give you My Figures free for a year to use when you fund through us.
Perfect. I didn't even know that.
Yeah, that's something new that we just launched.
Well, cool. Well, guys, you don't need to get a hold of Mike. You're going to get a hold of me. I'm going to have the link in the description. I mean, we are partnered up. I'll have all the information for you. Do not wait. If you don't have a line of credit and your business or your credit's shit, then that's when you need to start building your credit. Get it right. We'll fix it within 2 to 3 months, typically, if not typically 1 month, depending on how bad it is. I mean, now if you've got 2 bankruptcies and you don't pay your bills, you can contact us, but that's going to be a long haul, but unless your business is funding really well and you've really figured out business and your mistakes are there, but still it's going to be a long haul. But let's just say you're the average Joe with a couple of inquiries, you don't have a bankruptcy, your credit's 670. Yeah, we'll probably get you funded within 2 or 3 months with the 0% after we fix your credit. Right. I mean, we've already done it because I've done it. We've already done this. We've already done it. I've seen it. It's a proof. It works. That's one of the reasons why I didn't have Mike on too early. I wanted to make sure that we had a couple people funded, how it worked. Everyone's happy. And let me tell you, these guys are ecstatic. They are so happy. They don't worry about money anymore. They're using it correctly. I'm coaching them through it all. And it has really changed their lives. It's changed their lives. I mean, just the anxiety of, how am I going to pay mortgage or the truck payment? They don't worry about that anymore. And I want to thank you, Mike, for, letting me become a partner and go from there. So you have any parting words for everybody?
Really just the bank is like, a bank is like someone who gives you an umbrella when the sun shines out and takes it back when it's raining. Okay.
Yeah. So
if you only go for funding when you're in trouble, you're going to be gone. Now's the time to arrange these things, because whether 2026 you're going to scale or you're going to ride out the storm, when things get slow, you need funding to survive.
To one point to that, and we'll end the podcast. If you're doing well, this is even you are better to go get a line of credit when you're doing well, and you think, well, I don't need this because I'm doing so well. No. This is why you need it when you're doing well. I mean, of course, it helps you when you're doing bad, but for all you guys who's doing really good, well, think how much more you could do if you had a 0% line of credit, and you could literally start funding better, more stuff. Those dreams that you go to bed, I wish I could do this, but I got to hold back a little bit on.
Yeah.
This is what's going to allow you to do it. So you
I
can literally start doing it.
you know?
Yeah.
If I had one more truck, if I had, that new bit of machinery, if I could hire another crew, you
Yeah.
know,
Just there's so much out there. And of course, better marketing, more
yeah,
marketing, and all that kind of stuff. So guys, that's our box. Financial credit and lines of credit is the way to go to really build the business. So Mike, thanks for coming on.
thanks for
Really
having me.
appreciate you. And I can't wait for our future as we grow together and stuff like that. So guys, that's Stop Working Broke. And literally, this was the podcast to help you do that now. So guys, thank you. And we will see you next week.